Yo, good morning, how you doing? You ready to trade? Today we'll cover gold, oil, dollar, yen. That should be about it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never, ever risk money you cannot afford to lose. So thank you for being here today at the Forex.Today YouTube channel. Hello, my name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. Thank you very much for being here. Please ask questions, get involved. But also, it would be great if you could like and comment as well. Morning, Teddy. Or afternoon, I guess, huh? So make sure, if you are benefiting from these webinars that I do every single day for the last 15 years, please pay it back. Visit tradersway.com. Open up a demo account, download MT4, give us an opportunity to earn your loyalty and respect. And while you have your MT4, hey, look, in the description below this video, you'll see a link to download all my chart templates for free to install in that brand new MT4 account of yours. Smet Robin says, hey Wayne, I would like to thank you for teaching us and taking time, even with your Harvard schedule. Yes, so I am on my way to take a final examination. It's 2 essays and 3 short questions. And then I have another final examination, which is, I think it's just 2 essays. Well, once again, out of the 6,500 people at Harvard, we're the only ones taking 2 classes. Too much, too hard, too difficult. But I'm a currency trader. Not a problem. You guys are reading the book? Right on. Sweet. All right. Let's just go. Well, as a reminder, my class goes to 9:30 at night, and I'm having dinner with my cohort, coming home, packing, and leaving Harvard at 4 o'clock in the morning, getting on a plane, and flying home. So I'm not going to be able to do the webinar tomorrow. But I'm probably going to have a nervous breakdown. I'm probably going to get sick and all that kind of stuff, but I'll see you Monday. Okay, cool. So I'm already looking for next week. It must be a Thursday. Yep. So my next week trades either would look like this or they would look like this. Okay? That's one way of looking at it. I'd have to be a bull in US dollar, right? Cool. Yeah, that's pretty reasonable. Is there another way of doing this one? Well, what if I'm a bear on the US dollar? Ooh, great question. Joel, I've done that before. The Wi-Fi is not that good, not very reliable, but I'm also a little bit tired. Today we're submitting a 30-page, but I think we have 35 pages in our report that we're submitting. The fact that I'm already tired and I'm not going to even sleep tonight, I'm going to be a disaster, man. Going to be a disaster. I think this is where I lost you guys yesterday. We looked at this chart, and then YouTube had a heart attack or something. All right, cool. So this is a continuation of what we had before, which is really nice. All right, cool. Let us go to the basic setup. Do some exotics. Okay, yeah, why not? We've done exotics for a while. Do you feel exotic, Ted? Okay. So we've, of course, have talked about this. Let me change the template. And the major change here is people expect the Fed to cut interest rates. And emerging markets benefit from that. Okay? So that makes sense. You can see if you swing trade just for fun, we can point these things out. Okay, I guess let me try this different one. Okay, this is a sell zone. 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 And this is a sell zone. See? Oh, RJ, I'm not back, but yeah, still here. How about that? Okay. So isn't that interesting, guys? If you had an exotic basket of currencies, if you're truly carry trading, you're looking for trades that carry. Swing trading, man, you need to take the swing trading course. All right. I mean, that's it. That's it. There's nothing else to say. Am I still on the Euro Lira? Why my broker don't allow me to trade USD ZAR? They don't have the liquidity. Bill, you have to pay for liquidity. So they don't have a liquidity provider that offers that. So why don't you swing on over to tradersway.com. All right, so the question is, am I still in the Euro Turkish Lira trade? Yep. Sell, sell. Cool. Okay. You can see the role reversal here. That beautiful setup, second chance. So again, these are example trades that we talked about on how to carry. Computer's getting slow. So, you know, what's the big deal? Okay. This one, I've collected $200 in swap. Okay. And this one, I've collected $18 in swap. Is that a big deal? Well, I put them in different sizes so you can see. One mini lot would have cost me $100 of my own cash, and I've made $200 in interest payments. I have 200% return on investment just on my swap. Because remember, I get my $100 back, right? And then this one, which is a micro lot, I guess, right? That would only be $10. I've made $18.66. Like, that's the money I collected just in interest payments. Okay? So 200% here and almost that much there. Now check this out. It's got a floating profit of $1,000 in pips, almost $1,100 in pips. But I only have $10 invested, or sorry, $100 invested. So you put it all together, right? And it's pretty nice. It's 1,000%. Actually, a little more, but why be so nitpicky, right? 1,000%. And I traded this in May. 1,000%. That's nice, right? Plus 200% in income. So I consider this wealth, and this is income. So it's like buying a bond. I've owned a bond for 6 months, and it's paid me 200% interest. So I am lending Turkey money, but I'm like a loan shark. Isn't that neat? So now translate this to big money. What would you do if you were a hedge fund? Okay. What would you do if you're a hedge fund and you could lend Turkey money and charge them 600% a year? Now, it's not actually that you're charging them 600% a year, but of the cash you use. So I would have US dollars. I'm going to use, like in this case, 100 US dollars as collateral to borrow 100,000. Oh, sorry, I guess in this case, $10,000 in euro. Now I have my euro, and I lend that euro to Turkey. Okay? And because of the leverage, when you convert it back, it's hundreds and hundreds and hundreds and hundreds and hundreds of percent per year. Yeah, cool, right on. But I'm trying to get you, I've been trying to do this for a while, trying to get you to think like what if you were the bank? What if you were the international financier and you finance the economic activities of countries? Sounds better than scalping euro dollar. What do you do? I scalp euro dollar. Oh, I'm an international financier. I fund the economic activities of countries around the world. I tend to specialize in emerging markets because they need my help the most. Oh, bless you, Wayne, bless you. Oh, and I charge 600% a year. Which again isn't true. It's only 600% because of the leverage. See what I mean? You're earning 6% on every euro, but you leveraged your collateral 100 to 1. So, anyways, just trying to get you to think about it just a little bit differently. Okay, stuck in the range. I think we talked about this, right? I believe we had this down here as support, and we had this here as resistance. I outlined where bulls would buy and where bears would sell. Sad, of course there is, but that's why you need to do your due diligence. The most recent thing in Turkey is they fired their central banker. Now, a central bank is supposed to be independent, but Erdogan is a unique fella. Yeah, Oscar, let's talk about that. Like, how about next week? I mean, we'll talk a lot about that type of, I call that portfolio positioning. We'll do that in the beginning of August, really. What's up, Barry? Barry! Okay. So anyways, sideways. Yeah. So remember, I've been coaching you. If you're going to do something, do it at support or resistance. In here, like in a traditional market scenario, if you were a bull, I'd say, yeah, this might go up, but the 55 predicts a double top, so, this is just as likely as anything. But in the kind of quiet markets of the summer, if you're going to sell it, you need to sell high. If you're going to buy it, you need to buy low. You need to avoid the middle completely. So, you either short this blue area here or this blue area here, or you don't. Try to stay out of the middle. Okay? Just don't do it. Just try. be better. In your eyes I see it, the lights of home, the lights of home. Okay? WTI, you know I'm a bull. I know you know. And you know I know that you know that I'm a bull. Okay? Pretty straightforward. If you are a swing trader, that would be an area you'd look to buy, and this would be an area you'd look to buy. So you would have bought the first one pretty straight up, and it's gone. Now, if you were a bear on this, this is sort of your sell area, and yet you definitely had a sell position. And look, you were probably right for an entire week, right? And now we're way up here, so as you were right for a week, but you were wrong for, let's say, the last 6 weeks, still made money. Okay? Okay? If you sold it close to this M4, counter trend into here, that was pretty good. And then in here, it's pretty nice the other way. And I don't really know what more to say. It's pretty straightforward, especially, again, if you already did your fundamental analysis. And I can talk about the fundamentals on oil. And you know I have for hours and days and weeks. I've made myself clear a million times. Even when this was coming down, I'm talking about it, I'm still being a bull. Inventories are going up. That's a normal thing based on seasonality. And, you know, peak oil is June 1st. So here's June 1st, by the way, guys. There's June 1st. Peak oil. That's the lowest price. What happens when you have lots of supply? Price falls. What happens when you start to lose supply and demand is constant? Price goes up. So I've told you 6 months ago, a year ago, 2 years ago, 3 years ago, 4 years ago, 5 years ago, 6 years ago, 7 years ago, 8 years ago, 9 years ago, 10 years ago, 11 years ago. Like, no joke. June 1st is peak oil, and I know that from my own analysis. Well, actually, Kurt Worley did it, but it was for our analysis, FX Bootcamp analysis. And so every year, I share that analysis that historically June 1st is peak inventory for oil. And from there, I would expect inventory to be drawn down and price to go up. Oh, double bottom, higher high, higher low. Right? So hopefully it continues this way. It could go all the way to the end of the year. I don't know. I mean, again, you have to have basic models, and from the models you create assumptions, and assumptions you create plans, and plans you confirm or deny with technical analysis, and then technical analysis tells you the price and time to pull the trigger. Bob, you have to do a couple things. One thing is you're going to have to pay for the swing trading course and complete it. Because in the swing trading group, I don't really teach you how to swing trade. We swing trade. We look at the markets from a weekly point of view, from a monthly point of view. I'm also going to start teaching people day trading versions of swing trading, right? So it's more of a trading group than it is an educational group. Okay, so that's why you got to complete the course. The course, is probably, I'm going to guess, 6 hours worth of training and 15 hours of examples, right? And then in the group, we go through it every week. So again, now, like today's Thursday, for example, I'm already thinking next week. And that's the whole point of the swing trading group, where we meet on Fridays setting up trades for Monday or Tuesday. So, I don't explain myself. You should know, right? So that's why take that course first and then join the group, okay? Killer's FX Killer says, hey Wayne, do your charts ever freeze on you immediately after opening an MT4? No. No, they do not. So maybe you have something else installed and it creates a conflict, like maybe you have other indicators or EAs installed and you're adding mine to yours. Maybe they conflict. But if you open up a naked version of MT4, you should be fine. Now, you might actually have downloaded MT5 instead of MT4, and you're like, oh, what's the difference? Well, apparently there is a difference, and sometimes it's not so good on MT5. They're designed for MT4. Now, as more and more of the world moves to MT5, I guess this old dog will have to move over to MT5 as well, and you know, I'll put some money in the pocket of a programmer and boom, we'll have MT5. But right now, I still use MT4. You know, I don't know the difference. I think the only difference is MT5, they're trying to sell you signal services. Well, you don't really need a signal service, but anyways. By the way, the day trading planner, or the trade planner, whatever we're going to call it. The trade planner, I'm going to make a priority when I get back. Okay. So keep that in mind as well. Oh, then it should work fine, FX Killer. Yeah, if you put a naked install, like you basically opened up Trader's Way MT4, installed my chart templates, they should work perfectly fine. Absolutely perfect. I mean, not perfect, better than perfect. Miguel says, hey, where can I buy your book? Well, if you're not in the Antarctic, I would suggest use Amazon.com. But if you want to go to the Library of Congress in Washington, D.C. and borrow it, you can do that too. When you have a plan A and plan B, do you have criteria to enter trade at plan A? Seems aggressive and sometimes you're conservative. Yeah, sure, Oscar. Also, what you can do is you can keep your stop tight enough where if you get kicked out of A, you just wait for it to go higher or lower, and then you take plan B. Or if you like the trade so much, you trade at A and your stop is above or below B, and you incorporate that in your overall trade. So that might mean you might need, let's say, I'll exaggerate. Let's say normally you have a 50 pip stop or a 30 pip stop. Plan A and plan B, you might have a stop 100 pips away. But one of those plans in your analysis, you're certain will work. If it A, it's B. But why make multiple trades? So you can cut your lot size in half, and now risk-wise, the 100 pip stop is the same as your normal 50 pip stop, but now you have two lines of defense for your position, plus you don't have to babysit it as much, right? So you pull the trigger with half the lot size, your stop's 100 pips away, it's the same amount of risk, and you get in the trade, and that's it. And it's just like easy. Because the other way is you have to sit in front of your charts for 6 or 7 or 8 hours, babysitting plan A, and if plan A fails, now you have to do all the work over again, wait for all the timing, get everything right, take the risk again at plan B. It's a lot of work and it's a lot of stress. Sometimes you're like, yeah, I'll just do half size and get in. Where are all my monitors? I'm in a dormitory at Harvard University. I'm in Kirkland House, right there, by the way. If I look out the window in front of me, not the one behind me. If I look out the one behind me, you see the tower, the clock tower of Elliott House. I'm in Kirkland, so if I look out this window into my courtyard, I see Mark Zuckerberg's room where he invented Facebook. So it would look just like this room. Let's see if I can open this up. Let's see if I can do this. Okay, so this would be almost an exact duplicate. Okay, it's just a very simple dormitory. It's beautiful outside, by the way. Okay, and there's a bed there. Usually there's a desk there. Usually there's a desk there. There's a desk there, and of course I'm at a desk, right? Very, very, very simple. But this is exactly the same room that Mark Zuckerberg invented Facebook. And the actual room is right there, 2 over. And so he has a story where the press started calling a lot about Facebook. They wanted to talk about what is Facebook, what is Facebook, what is Facebook. But he did all the programming at the computer lab at the Science Center, which is just over across from the old yard. And because it's a concrete building, he couldn't get any cell phone signal. So he'd come back, he'd get to his dorm, and all of a sudden, pa-ching, 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 all these messages on his cell phone. So he's got other roommates, and so he'd say, "Hey man, you guys need a job? I need you to answer phone calls and talk about Facebook when people call me." And they're like, "Yeah, sure." They're billionaires now. Nice. Is the fireplace real? Yeah. So this house, Kirkland House, and most of the river houses, they started building them around, I think, 1910, 1911. And then they had to stop during World War I. And then once World War I was done, then they completed it and made them available to the students. So it's a newer thing at Harvard. Most things here are much older than that. So when you see them, they're beautiful on the outside. They're absolutely beautiful. And they have common rooms that are beautiful. They have their own libraries and study rooms. They have their own kitchens with their own chefs and kitchen staff. They have their own, what do you call them, tutors. So if you start to get bad grades, they automatically kick in and kick your ass and get you fixed. So they, there's no fraternities at Harvard and all that kind of stuff. And when you look at Harvard Square and the rest of Cambridge, all around Harvard, there's only one dive bar. If you've ever been to a college campus in the United States, like, I don't know, Ohio State, there's 10,000 little dive bars and stuff. But here, nobody goes out because it's all safe and everything's in your house. So we have Elliott House behind me. I'm in Kirkland. There's Winthrop. There's Lowell. There's Leverett. They're all right here, and it's crazy, amazingly beautiful. Okay, very neat. So so this is truly. I could pretend this is Zuckerberg's room, and it'd be exactly the same. So how cool is that, right? Bill Gates, when he was a freshman, I don't think he made it past his freshman year, but he was in, when you're a freshman, you live in the old yard, and he lived in a building called Wigglesworth, which is fantastically Harry Potter-like. But most of Harvard is. Wayne, can you show us how to use the moving averages, volatility, stochastics, etc.? Yes, go to... you'll have to do it this way. You'll have to do it. I'll put it in one date. I'm typing, by the way, youtube.com/FXBootcamp. Okay, and in there, click on the playlists, and there's a playlist on timing your trades. And it goes over moving averages, oscillators, pivot points, and all that kind of stuff. Yeah, that's the Border Cafe. Let me get rid of the fire. Sorry about that. Don't be afraid. It's not real. Yeah, and that's Border Cafe. So it's really cool. It's quite a privilege to go to this place. And it's actually quite an amazing experience. I mean, now that we're just talking one-on-one here. I've been working my ass off since I've been here, right? Like sleeping 4 hours a day, that kind of stuff. I've actually laid in bed exhausted and got up and like, no, I got to keep going, right? And I'm reading in the pitch dark, going to bed at 4 o'clock in the morning, 2 o'clock in the morning, getting up at 6. But currency traders do that, I guess. but to just relentlessly go, and you're tested and tested and tested and tested and tested and pushed and pushed and pushed, and you're doing it sort of in a place you want to be pushed. You want to experience excellence at an institution like this. And this is my 4th year, so I truly am a Harvard man, which is pretty cool and pretty special. And I have the degree now. I'm in the Alumni Association. I got the gold ring, and I'm still pushing for more, which is pretty cool. It's quite an experience, and it's sort of like a similar feeling I had years ago. Is I was flying into New York City. I had some big meetings with potential investors. I was going on television to talk about Forex. I got my power suit on and my 7-fold tie, and I'm flying into downtown Manhattan to the Wall Street heliport by helicopter. And you're just like, this is how you do New York, right? It's just like, this is how you do it. And it just feels so good in the moment, like you're cheering for yourself, from the outside. You're like, good job, right? And Harvard's sort of like that too. So it's interesting. Anyways, it feels good and keeps me pumped and jazzed. And as I suppose the leader of our community, or as your mentor, it just keeps me sharper and still interested in what we're doing, and gives more experience that I can share with you, right? So in a way, you're on this journey with me. You're at Harvard, right? So you learn macroeconomics from someone that has a macroeconomics degree from Harvard and graduated with honors. One of the top dogs. So cool. It's us. It's our journey. So thank you for being with me on it. And here I am. I have absolutely no time at all. I have no time to be doing this, but you're that important to me. So I should be studying for my final exam, which is in about 2 hours, according to my watch. But I want to make sure that we get our time together. Because, you fire me up. I could have been super tired. So anyways, thank you is all I'm trying to say. All right, let's get a couple more in, and then let's move on to .com. Sammy says, how about your pivots? So, look, guys, look. Okay, I'm here every day, or almost every day. Well, I'd say every day. I won't be here tomorrow, but it's still every day. And I do talk about them and all that kind of stuff. I have written a book, actually several books. I'm trying to make as many resources available to you as possible. In a 1-hour free video on YouTube, I can't provide all that you need. I can push you in the right direction, give you inspiration, all that. But you're going to have to take the time to learn these things, right? So if you go to fxbootcamp.com, there's dozens and dozens and dozens and dozens of hours of training courses that have been created for you to get what you need. Okay, yes, it costs money, but that's the point is it's been done and made available. It's a resource that is available for you. So eventually, if you can, Sammy, you would go to FX Bootcamp and take a course, and you would learn everything you can possibly imagine about pivot points, and actually how to trade them on a daily basis, weekly basis, monthly basis. So right? And then once you're done that and you're ready for a live mentor, a real mentor to hold your hand and push and pull and kick and kiss, that's available at live.fxbootcamp.com. So just save your pennies and quarters if you need, but it's all there. Okay? All right. So somebody asked for USD Swiss franc. Okay, we can take a look at that. Okay. So it comes down to which way you're going. Obviously, you can see there's multiple points of view. So you can put a regression study in there. Here we go. So notice I'm grabbing from the bottom. I'm not pulling up. Okay, I'm not pulling up to the top. I'm pulling left to right. So I'm pulling straight right, and what it's doing is it's calculating the average and the standard deviation. Okay? So the average, right? Or sorry, it's actually the mean, but okay. And then the standard deviation. Okay? And that gives you, that's one sort of tool where you can say, well, over the last 3 weeks, this has been much more up than down, but over time it's been much more down than up. Okay, and that's fractal geometry. Now you can update this because you can see this regression study stopped here. What if I added more data? What does it say about the long term? Okay, pulling. Okay, you can see what the long term is trying to tell you is we might be closer to a top. Okay, and then it would continue down. So like this was higher, and then it came down, and then it went higher, came down, and higher. Now I take that, and I say to myself, well, I got to include some pivot points. Okay, so next week would probably look like this. The following week would probably look like this, and then come back around. So we might get sort of closer to the top, or even breach this top a little bit. That's all right, because these are just averages. The averages can change, right? They're not predicting everything. It's just saying this is the average over that time frame that I've measured, and it looked at the standard deviation this way, right? You can almost think of it as like highest high and lowest low, or highest average high and highest average low is another way, but just consider it like peak, valley there, there's going to be a peak up here, and it's measuring that. So at some point, if this is swinging, and it looks like it is, because this is a swing trade right here. So let's change this up a little bit. The most important price I see is actually this combination right here. Okay, this is a step up into a monthly swing trade, and our conservative target is there. So my first assumption is that's where we're going. Then I have to fit the other things in and say, well, for that to happen, okay, I have to look at next week's trade. Next week's trade is right where we are now, and up into here, which puts us to the top of this. And being summer, this may come all the way back down and then head back up. Only because, you know, like we don't expect major moves. We don't really expect breakouts during the summer. There's no volume and volatility, right? So I have to try to fit all of that. So at the very least, in summary, right, in conclusion, if I was bullish on this because of the last 3 weeks, this is next week's entry, this is next week's target, I would be trading that on Thursday, and I'm probably going to take profit on Monday, and then that would create a counter trend trade. So I'm already looking at Monday or Tuesday. Okay? Who was it that asked about the training course? Something just occurred to me. Sammy? Sammy, if you were on the mailing list, the email mailing list, you would have been sent a coupon code to get the videos for very cheap. Like, I think it was 62% discount. When I get back, I'm going to send one more email, last chance for summer school. So that just occurred to me, make sure you sign up. And again, by signing up, you just download my chart templates. Because right now I have your email address. And so I'll send out one last chance. I mean, I sent it out 3 weeks ago. So I'll send out one more coupons expiring email kind of thing. So get on that list and you'll save 60%. Right on, Desmet. Yeah, well, that's the complicated part, right, Robin? Right? I have to fold in a monthly point of view, a 3-week trend point of view, next week's swing point of view, and then the overall month point of view, all with the summer seasonality sprinkled on top. And I'm not even really talking about the fundamentals of USD or Swiss franc. Because if I was talking about the fundamentals and I said, well, how do you feel about macroeconomics? Is the overall market bullish or bearish? Well, if you said it's bearish, well, the US dollar would get strong, but so would the Swiss franc. So I'm like, well, this would be dumb to trade. And then I'll say, oh, well, what if you were bullish on global macroeconomics? Well, then the dollar would get weak, but so would the Swiss franc. You know what I mean? So I'm like, are you sure you want to be trading this? Okay. When are you going home today? I have a final examination at noon. And that goes from noon to 3. And then from 6 to 9:30, 6:30 to 9:30, I have the final exam. Then I'm having dinner with my cohort. Then I'm coming home, coming back to the dorm, picking up my luggage, and going to the airport without sleeping. So I'll be home tomorrow morning. And then I'd like to sleep for a week, but then after a quick nap, I'm going to go pick up my children from summer camp. So, yeah. I'm not going to get a full night's sleep till Tuesday. Not Tuesday, Saturday. I'll probably get sick. I'm probably going to look like a train wreck on Monday. I'll probably look like a train wreck now. Huh? Is that all right? Looks terrible, huh? I rocked our presentation. We had a 15-minute presentation last night. We took 14 minutes and 58 seconds. And the only question from the professor is like, why hasn't this been done? Yeah! So that was good. I feel good, but I feel tired. All right, let's get a couple more in. Don't say beast. Euro dollar you might be interested in. Yeah, I talked about this yesterday, so I guess this is just a great review. This is a role reversal area in which you would short, and of course that's confirmed by the 55 EMA, and that would make you expect a double bottom. So I'm assuming around your London Open, you would have been there with bells on, and you were probably going to wait for a skippy scalpy, and you probably got it. And I don't know, if you traded some silly London breakout nonsense, you probably got your ass whooped. All right. But if you had a trade plan where you're in control, you made money. Pretty cool. Nice. Take a quick look at maybe the yen-yens. Right on, Oscar. Well, Oscar, you guys do make me proud. I talk about, our community with people about how we go through strife and struggle, but there's sort of a pride to it all. That, as a group, we have a certain confidence, an extra little stride in our step that we might not have on our own. So, I think what we have is really wonderful, and I have utmost confidence in your ability. I just know it takes a lot of work and it takes time, but I definitely know you can do this, right? But it has to be a consistent, constant thing, and that's why I'll roll out of bed with 4 hours sleep, and I'm like, I can't let them down. Because you're trying so hard, and you're making your sacrifices, and you're putting in the blood, sweat, and tears for years. I can't fold either. So you keep me strong, and I keep you going, and together, we have something quite powerful. We're more than a group of individuals. Oh, Gary, I said something? Did I go too far off? Sure. Yeah, what did I say, Gary? Sorry, I'm really tired, so I must. Did I say something wrong, Gary? If so, I do apologize. Mm-mm-mm. Yeah, just kind of, again, this looks like the other thing we covered. We got a little trend. We're in the middle. We're not high. We're not low. Okay, so you're going to have to stick to your trade plans. I can see a clear trade plan like this, right? And then if we hit that counter trend next week, the question is, do we have that much juice left? Gee, Gary, I'm still bothered by it. What did I say? Yeah, can't even say. I'm too tired. I'm so tired. My eyes are blurry and I can barely see the screen. So, but I got to go study. I guess we'll just leave it at that, right? I mean, Powell still has to go through his stuff and churn and open up these markets. But I'll leave you with something. Since I won't be able to do the webinar tomorrow, don't just think about today. Start planning next week. Are you a bull or a bear? And if so, what are the proper prices? And then with the proper prices identified, and you might be on them right now, then you need to start planning entries. Okay? If not for real entries, at least for practice entries on your demo account, and see if you can start planning your trades 2 days in advance. Okay? Thank you, Chris. Yeah, I better go. I better go study. My professor is an ex-Marine and runs the PhD program at Harvard Business School. So I better not screw up. Huh? So, anyways, thank you guys. Peace on earth. May the pips be with you. May our profits be above average. Have a wonderful weekend. I'll see you from the office on Monday. Cheers.